Hello guys, welcome to the Trading Parrot into another episode of the Sunday Alpha Special. On Sundays, I do something unique, which is to look at all the alpha I can capture that we can take away into the week and apply it to our trading. Swing trading, scalping, or whatever you're planning to do, even investing. The alpha that we're gonna discuss in this video is a condensed pack of information for crypto investors. One indicator particular that I wanna discuss in today's episode, whatever you do in the video, do not miss when I cover this one. It's called the top bottom weekly indicator. It has never failed since 2 or 3 years that I built it. And today, precisely this week, is giving us a strong signal. Remember that in the video there will be timestamps. The video is long and there are some parts that might not be your interest. You can always go to the description and skip to what matters to you. Whether you want to look at the long term, the short term, what happens with CME gaps, what happens with liquidity, order book, and all of that, you can go straight to that if that's what you want. Guys, if you like this type of content, make sure that you are subscribe to the channel. Hit that notification bell to get notified every time I put out one of these videos. If you're a hardcore fan of the channel, hitting the like right now, giving me the vote of trust before I start even talking, I will really appreciate that. That helps with the algorithm. If you're new to the channel, watch the full video, see if something helps you, something is good to you, and hit the like later. Alright, let's go into the content. We can see that the interest over time on Bitcoin was breaking out to 37 around the 2nd of March. That was thanks to the correction on Bitcoin that attracted retail to see what the hell is going on with the price that is correcting and losing the 80s. After that, there has been significant pain to retail, and as a consequence, they have gone quiet. A similar effect we have in 2024. We were reaching highs and eventually this started crumbling into the 18 and 17. We spent at those low levels of engagement around Bitcoin from retail, and eventually out of the blue we have a spike from 18 to 65. The question is, are we going to see something like this year? My opinion is yes. Eventually we're gonna have another spike, and I'm expecting that to come with some highs on the price. I cannot guarantee an all-time high from where we are standing, but at the very least I think there will be a strong dead cat bounce that is gonna take everybody by surprise. Honestly, as a swing trader, I no longer care if we get another all-time high. I just care that we have volatility, but that's another story. Let's go into the news. Let's see what really stands out in this section. I don't use the news to trade. I just want to have an idea of what other people are thinking. Remember that this is not source of actual information. This is source of manipulation. So we take it as it is and we see basically how people are being manipulated at the moment. There is an article in here called Bitcoin poised to reclaim 90,000 according to derivatives metrics. So this has a bullish stand. Bitcoin derivatives show no stress, supporting resilience despite 920 million in long liquidations to put BTC price on track towards the 90k levels in the coming weeks. And then I start scrolling down and seeing where is this coming from, and it says Bitcoin derivatives show no signs of stress. After reading this, I'm not so convinced. I have to tell you, professional traders are not actively using Bitcoin options for hedging presently, as shown by the 25% delta skew metric. This implies that few market participants expect the BTC price to retest the 76.9 level anytime. I don't think it's wrong, it's just something that I don't use, and if I did use this, I wouldn't use it by itself. Sometimes you can see in my channel multiple indicators, multiple things calling for bullishness, and then at the end of the day, when you learn what am I doing with my position, sometimes I'm doing the opposite because I have to decide what information I ignore. And I think I am expecting still a little bit of upside. You know, I'm in a long, but I wouldn't blindly think we're going to 90, put a position, forget about it, put my limit order to sell just because of an article like this. And believe it or not, some people do that. They just read this, they say, it looks professional enough to me, let's go with a long. In the Sunday Alpha, we go beyond that point, we read this, but then we contrast it with other information. Telegram founder Pavel Durov given permission to leave France. Neither Durov nor his legal team have issued a public statement I don't know really what changed the mind of France, whether he had to pay a big amount of a fee or something, whether there was some negotiations, but the price of ton went 19% overnight thanks to that. The last thing I heard is that he was going to spend his life in jail and pay a huge fine, and out of the blue this comes, which I think is positive. I would like to hear from France authorities if they are doing this because now they're changing their politics when it comes to these situations, or if they just receive a huge amount of money. I also have this article, very possible Bitcoin consolidates for 8 months again, 10x research. Remember that we've been already consolidating for a few months. So if you take consolidation from December and we are in March, that's already around 3 months plus of consolidation. You take the 8 months, so they are talking about 5 more months of consolidation, putting us in Q4 possibly for an expected breakout, assuming that they are expecting a breakout after consolidation, which will make sense. They compare what Bitcoin is doing right now with 2024. I feel like this was just an interview to Marcus Thielen about, yeah, it's very possible. Then there is some mentions of 2 flags, high and tight flag, that is pointing to weakness. Then the article goes a little bit bearish. I think it's all over the place. People don't even read it. They just read the bullish headline, which might have been written by someone else and not even confirmed by the actual technical trader. And that's why you need to watch out for manipulation when you find sources of technical analysis from news sources. Bitcoin needs weekly close above 81k to avoid downside ahead of FOMC. In today's video, we're going to look at that 81 that I mentioned on Friday. We said very clearly that on the 4 hour, if the RSI comes down and it meets with 45, that was going to be around 81.5. But since the price has been going just sideways at the moment, the point of contact is going to be different. Our support is shifting up and we need to defend it on the 4 hour. We'll talk about that just in a second. I've got a few additional things that we need to cover. We had the FOMC meeting on Wednesday and the Fed press conference. Probably I'm going to do a live stream, so make sure you're subscribed, notification bell, follow me on Twitter, Instagram, and Telegram to stay informed in case you're not getting those notifications. You can see that 2% are expecting the rates to ease. So unless that changes overnight, we should see things already priced in. And I think the correction that we have in general markets the past week probably were already reflecting that expectation. But still, around Wednesday, we should be expecting some volatility. That's the typical case, regardless of meeting expectations. And I have covered this already 3 days in a row. So if you watch all the videos, bear with me. But this is Sunday Alpha, and this is one of the strongest alpha I currently have on the bullish case. Federal Reserve balance sheet continues the trajectory to the upside after a double bottom. That is bullish, and we've been since around late 2024 looking for a double bottom in here. I still remember in a video saying this new low is higher than this. Let's look for a neck formation of a double bottom. Let's look for higher highs, higher lows. It's been a long journey, and here we are with a higher high, confirmed breakout of neckline, line, channel to the upside, everything. It's not as intense, of course, as 2021, where breakouts did just a move and then parabolic. But hey, maybe, just maybe, we could fill all this area in here. And if that's the case, that is liquidity coming into the system. You can see that not much has come. Indeed, it's been shrinking the liquidity coming into crypto. So that divergence as well against the M2 that is now also with an all-time high and new high relative to the previous high, double bottom formation playing out very similar to previous bottom formations. We're talking about the global M2, guys, so this is liquidity going to everywhere, not just to the US like the balance sheet of the Federal Reserve. And on aggregated open interest, we end the week with a double bottom formation of the open interest and open interest higher than the neck. this is a very early signal, okay? I'm not claiming that this calls necessarily for a bottom, but it is positive to see in here a potential shift in the structure of the aggregated open interest. Think about this. We were doing very, very intense lower lows and lower highs, and now we are kind of shifting that on the aggregated open interest. So the question is now, is the open interest gonna have a rally into this as resistance? Remember, in 2024 it played by the book in here. In 2025 the call didn't play out, and around early February we were already noticing that this was playing out different than in here. I didn't say because of that we need to sell, but we couldn't use that alpha for a breakout from the top as we did in August 2024, anticipating this rally. March is extremely flat. The price moves one tiny bit and we are in the green or in the red. We are at 0.22%, and the alpha in here is just a gently reminder that February in the negative has led to March in the negative, like you can see in 2014, in 2020. The reasons for that are enough to make 2 or 3 videos, but keep that in mind, and this sort of past performance hasn't been playing out as well. There was plenty of alpha that we were talking about, past performance of monthly returns, that didn't play out since September to December, January, February. Most of the calls were wrong. A couple of them were right, but the rest were wrong, so don't take too serious in case someone sells you the idea of March must be red because February was red. Hash ribbon is in recovery. This is tracking miners capitulation. This means that the hash rate has already pushed back up. We have 2 capitulations, one early February, one in March. Capitulations, if they don't recover quickly, can bring the price lower because miners get stressed. They need to force sell to keep those machines going on, have electricity, pay bills, salaries, everything. And the fact that the hash rate went back up and it triggered a recovery signal, then it means that all we have left now to move back up is the price to move up and produce a bull cross. With the bull cross on the price together with the recent recovery signal, then the hash ribbons indicator has the full recipe to print a buy. Buy signals, as you can see in the past performance, you can pause the video and you're gonna struggle really to find one that hasn't played out in the past. Let's define though what it means to play out. Playing out means that in no more than a few days to weeks, you can start seeing upside most of the time, 80 to 90%. That 10%, I will reserve it to say, yes, it went up, but there was some drawdown. How much drawdown? Most of the time, that drawdown is from 5 to 10%, but there has been some exceptions. For example, this buy in here had, in my opinion, the worst drawdown with 29% before going up 60. And now we are at the top bottom weekly indicator part of the video. I'm gonna cover this indicator. I built it years ago and I cannot believe I'm still using it. We were talking about the contraction of the volatility in Bitcoin multiple times, and you can see that cycle by cycle, if you follow the price at the top, we've been contracting. How low we go, how high we go, that is beautifully shown in this indicator in here. Are there exceptions? Yes, in the bear market in 2022, this move in here kind of spoiled the picture. And I'm betting that you're probably gonna think, well, there is an exception there, so we cannot really use it. I still think that the nature of the volatility follows this trend regardless of this anomaly in here. You can see market tops, you can see market bottoms of the volatility, not of the price. Those are extreme volatile moments to upside or downside. For example, in 2018, that is the bottom of the market. Below this line on 2022, that was not the bottom, but that was the moment that we were about to break out. Safer entry into bull market is the breakout of volatility to the upside when this reverses. For example, entering in February 2015, best time to enter for 2017. Breakout on 4th of February 2019, best price to rally into 2021. You are like a boss there, you put all your cash in Bitcoin and you just enjoy the ride. The most recent signal in August 2022 was not the bottom of the market. Let's remember that most of the indicators flagged 20k as the bottom in 2022, contrarian to what happened after with the FTX collapse that kind of put a new lower floor in that bear market that wasn't expected by any indicator. That's why we had so many whales accumulating at 20 and they had to reaccumulate at 15k. But yes, still, if you enter in August, you enter at 20k. I mean, tell me in the comments who wouldn't want to be now holding Bitcoin at a realized entry of 20k. Now, let's ignore now that these are tops, that we have another top in here. There's so much that we can go on. That is for a full video on this indicator. Let's just go into what's going on at the moment. So in 2024, we have these bottoms. Those were the best times to enter in the megaphone pattern. This top in here was around the 73 and the intra candle touched that. So just go to 4th of March, watch my videos, and I presented this indicator as one of the strongest reasons why I was selling. The indicator is free. You can find it on my TradingView account, or you can go to tradingparrot.com/charts and you can copy this particular chart into your TradingView account for free. There are two versions of the indicator, the original one, which is an oscillator, and the one that looks like a Bollinger Band, which is not, but you can find it as well. 73, 5 or 6 or 7 at that point in intra candle, the line was touching this, and I say, well, we have to sell here, guys. And everybody say, no, that's just your stupid indicator, we have to ignore it, let's just ride it to 150. I sold there with the confluence of this, with 99.6% of the people being in profit, and a long list of indicators saying that is the top. Then I used these ones to buy as well, a 49, 53, and all these bottoms that we were having in here. Now we are below the trend line. So there's gonna be in the comments some people are gonna say, well, you are below again, you are ready to enter bear market and have just the second anomaly. But if we reclaim in here, guys, and we are making videos in this end, I'm gonna be telling you, finger pointing into the camera and telling you why you didn't pay attention to that. This one is saying we're very close to a bottom. The problem is, well, we're gonna potentially have later in the year a rally into that resistance, but eventually we're gonna get to a point where this pretty much becomes a stable coin because the volatility is getting completely squeezed. Let me know what you think about this particular indicator, and you can see I have plenty of more information for today, what we need to cover. We're gonna know, now we're gonna go into shorter term. I'm gonna focus on 4-hour daily. We're gonna do surgery to the order book and remove every single crappy thing that we find there, every single thing that looks dodgy. I'm gonna expose it in this video. So you can see 4-hour has put a high of 59 in this area. We're out of the 20s, 30s, 40s. We're hovering above 53 and just going sideways. There is something that I find really disturbing in the price action on weekends recently. It has happened multiple times in the past, but now it's happening every single stupid weekend, which is we close on Friday and we start just going sideways like this. Low volume is typical in weekends. Don't get me wrong, I'm not being silly in here, but look at how constrained the candles are. They're not moving at all. They just literally fluctuate like a stable coin over the weekend. And you might think that there is no active trading, but there must be something else, because in the order book I'm starting to see how they are squashing the price with millions at the top, millions at the bottom, and I don't think they have the intention to trade it. They're just manipulating it and keeping the price in the same position. Very strange behavior. We are seeing the same thing over the weekend. On Friday I say that all we can afford at the moment to maintain the trend, to maintain the high likelihood to go for the next liquidation levels of 87, is ideally to defend the support on the 4-hour channel on RSI. That support on Friday was around 45. I think I left it already with this line in the price. So around Friday it was on the third fair value gap from top to bottom, 1, 2 and 3. So I said if we are going to go over the weekend weekend to any support to test that support on 4 hour. Let's not go beyond 81.6, otherwise we're gonna get a breakdown in here and starting to look for lower levels of RSI. But you can see the RSI, the trend line here is going higher. We cannot go to 45. If we meet with the line, we're gonna meet with it around 48 now. So we need to update this to 48. And also the calculation of the reverse RSI, which is an indicator that you can find for free on TradingView, but currently I'm using my own version of it that you can get from my website tradingparrot.com. And in this version, what I do is I have the RSI in here and I place the inverse target with a number there and it shows in the price where is that located. And as you can see, over the weekend, it has been moving up, getting closer to just the first fair value gap, which we have already consumed half of it. At the moment, is at a price of 83.258. So if we don't want a breakdown on the 4 hour, ideally, let's defend that to keep those chances that when volume comes back or when the manipulation of the weekend, those levels above and below the price are removed, we can get to 87. So far, we have a bullish structure here with higher lows and higher highs on the 4 hour, just getting started. And we had a breakout above the 84K. The breakout is with very low volume now, but the candle that broke above 84 was decent volume. After that, we enter immediately the weekend and everything shrank in terms of volume. That is the level that RSI wanted defended, but price should defend 80. That is the most recent low, at least when it comes to the 4 hour. If we go to the daily, we're gonna find different levels and we're gonna have to do our best to find confluence if we can. On daily, I have good news. I already shared on Twitter a few hours ago. We have a MACD confirmed at midnight. This is a bullish cross on the daily. You can see that we have done a big reset from 7,000 to minus 3,000. That's a range of 10K on the MACD. Big shift in momentum, and now from the lower end we are seeing some bottoming moves in here. We saw something similar in the middle of the range, but we took it less serious because a cross below the zero line, so close to the zero line, is not as good as doing it 3,000 lower. Let's hope that we don't have to wait for another fake out and then doing this from a lower end like this. In the bull market, bullish crosses, the lower, the further away from the zero line below, the most bullish. On the daily, we've been looking at this falling wedge in here, and we were thinking that there are two chances that we can trade. The failure to retest both the 84.2 or coming back below the 200 daily moving average. If that was the case, we say that ideally we want to defend a candle that forms at the bottom of the wedge. If we manage to cross above it, there are people that are currently shorting already with orders placed at this top end. So price can go above on a daily basis, intra candle, get sold off because of all those shorts and come back inside this falling wedge. We don't know yet when are we gonna exit from the wedge or from which direction, but so far you can see that over the weekend we have been slightly above the 84.2, and now if we zoom in with a magnifier glass, you can see 2 days so far above the 200 moving average daily. Let's remember that Sundays haven't been great. The last Sunday we had this big red candle crossing 84 and going lower into the 70s. So if that was the case, this Sunday a candle that magnitude is just enough to go to the bottom of the wedge. So watch out for that possibility. I'm not saying that is the forecast. On the daily RSI, we are doing now over the whole week, we've been watching at this with the expectation of forming a channel to the upside on RSI daily, breaking the global resistance, which is this yellow line in here, and eventually going towards the top end of the range. I have my doubts at the moment that we can really get into 85, just like we have done 4 times in the full bull market with diminishing numbers of momentum. I have my doubts that we can really get that high, and I'm expecting that potentially we go high, but maybe we go just to the 70s. Doing just a very quick calculation, let's say we go to 70s just to have some hopium that can already put the price of Bitcoin at 109k. Remember that momentum can top at 70, giving you 109k. After that, if you start doing bearish divergences with the price on the daily, price can still climb to 128 after that, even if the momentum cannot put a new high. That is just the nature of momentum indicators that no one explains to you when you're studying RSI, MACDs, and all of these different tools. Make sure that you watch my tutorials. I have tutorials for RSI and many other indicators. Just go to my channel in YouTube, scroll in the main page. Going lower in here, you're gonna find in home all my trading tutorials. I got like 10 tutorials covering the things that I use the most. If I'm missing any trading tutorial in that section, you have to tell me and remind me to cover other things that are also important. So let's identify what we need to do ideally this week. And in my opinion, what we need to be watching out for is a test of resistance. We were looking at resistance at 50, but since the RSI has been moving in this direction, we are at 44 at the moment. So realistically speaking, if we have now a pullback and then we do something like this, maybe we meet with the RSI at 47. 50 is impossible because 50 will mean that we need to meet with resistance in the past. So let's put 47. Let's identify the resistance on the daily, and that will be around a price of 85.8. Keep that number in mind, because if it coincides with liquidation levels later in the video, we get a case for an initial pullback. When you meet with resistance and it's strong and it's got liquidity and other fair value gaps around it, it becomes like literally hitting a wall, at least the first time you do it. So you can decide to take profits there and re-enter, or do nothing. Is up to you. On the weekly, stochastic RSI, if price remains where we are and it doesn't go much lower, let's call it 84k, there is a high chance that we see a bullish cross on the weekly. Bullish crosses on the weekly should come with decent momentum to the upside. Let's review the previous megaphone pattern. We have some bullish crosses, and during a period of ranging, bullish crosses can just confirm what has already happened. So watch out with that. This last bullish cross in here at a price of 64 was the one that preceded the rally into 105, but all the previous bullish crosses just gave one more candle up. So watch out for that. We didn't use stochastic RSI bullish crosses to enter. We used it to confirm our entry that was already in place. And you know I'm already in a long. I enter at 77.5, and if we get faken out in here and we go lower, we are prepared to deploy second order. If you are new to the channel, make sure you are subscribed so you follow my approach. And if you want all in a written format sent to your email with summaries of the videos and occasional updates if I change something on my positions, then the place to be is on Patreon. That costs around $10 a month, and there is a new tier called Elite. Next week we are going to have our first private TA session, 1 hour with all the Elite members, reviewing the altcoins that you want to trade, as many as we can squeeze, and do as well a QA private with all Elite members. I'll see you there. On CPR, we are now confronting the pivots. Those pivots tend to be strong resistance. They are located between 86.3 to 90.6. So watch out for resistance around there. If we carry on higher, our next support, according to CPR, is around 74 at the moment. And CME is very important to talk about this, because on Monday, CME is going to open the market, and we have a gap from the previous week that we left $200. And if price remains in here, we are more or less not going to have any gap. We closed at 84,587. That was the closing price. We are now at 84. So we are building a $500 gap to the upside. And if price carries on going, let's say into 82, then we're going to get something like a 2.5k CME gap that is going to join the stimulus, the motivation to go higher together with the previous week leftover. Monthly chart candles don't look great. We have an indecision candle, but this area in here is the concerning part. Large wick to the upside, defining a support at 93.3 and then crossing it all the way down with a large red candle in February spells some doom about the upcoming candle, which is March. That's the isolated analysis on the monthly, but we can see as well something very interesting that I don't know if I have mentioned to you guys. This is pure alpha. When you get a breakout to the upside or to the downside, what do you look for? I look for volume. I look for volume confirming the breakout. For example, in this area in here, we have this breakout and eventually we break above the 60s and we see one candle with volume, another candle with volume beyond the moving average. In this big green candle volume, there must be volume confirming. This breakdown that we have in here has shrunk in volume, okay? In the monthly context, on the 4-hour, we are upside down. Every time we put a new low, the volume increases. When we start going higher, the volume is taken out. So we have a divergence in terms of this behavior of the 4-hour versus the monthly. The monthly is saying, well, I broke down, but I didn't hit much volume, so I'm really not breaking down below 93. And 4-hour is saying there's still some downside in the 4-hour context. And the monthly is approaching support. That could be one reason why we didn't get a breakdown with volume, because it's approaching this line. We are supposedly in a bull market and we got a structure in here with the RSI with higher highs and higher lows and coming into that monthly support. Maybe that's why the volume of the breakdown was so humble in this area and it continues to diminish. So even in this area in here, it's kind of saying, I don't want to go in that direction really. The stochastic bearish cross on the monthly says something completely different, says, I have never done this without going into a bear market in the next months. Watch my older videos for the full detail. We have had last week some distribution from large holders. I covered that more in depth in the video yesterday. We've been in a period of heavy distribution on the ETFs. We are in fear out of the extreme fear. Extreme fear was when we were building our position. In fear, we wait. In neutral, we wait. In greed and extreme greed, we look for exits. All right, going back into shorter term, let's see how liquidity is acting this week. Let's try to spot manipulation, opportunities, and all of that while doing the surgery of the order book too. Well, prices on the weekend, we hit the red liquidity. We talked about this mid last week. We hit that liquidity and we have built quite a lot more on the top end in here. You can see that we have at 81.6, but it's green. And you can see how big is in here. So we are basically comparing all of this liquidity versus going low and trapping that one to get into the 70s. So market maker needs to decide between immediate liquidity above the price that spikes there, then it remains high for quite a long time until the 90s, or maybe just hitting the 81 or the 79.6 that are peaks in liquidity but not as high as if we go up. In this sort of situations, I tend to leave the last word to general markets. General markets, pre-market prices being negative, and there is a chance that scenario 1, we hit this and go lower, or we don't hit that and we go straight lower, and you're gonna end up thinking, why we didn't take that? Well, we have had a few iterations where we leave on the table something really juicy. If we go lower with general markets and we break structure again on a weekly basis structure on general markets, I will take for granted that this is next. If general markets continue on the trajectory of potentially recovering, then we can go for the 87, 90s liquidity. This is the way it looks in the long term, the liquidity. We have huge accumulations at the top that now people are discussing and saying, well, maybe we are never gonna go there. They're just gonna get away with shorting the top of the cycle. In my opinion, some positiveness in here could form a beautiful double bottom. This is the 4-hour time frame. If we were able to do such a thing, for that, we need to get into 94K, so that already is quite tough. Remember, the last time we went to 94 against that resistance was because Trump tweeted on a Sunday, and then everything sold off the day after. But if we happen to get lucky and break to 94, that will mean that we are already breaking out from the falling wedge on the daily. Think about this. The falling wedge at the moment meets, if we do an instantaneous pump, we meet with 89. So going into 94 definitely is already a breakout from the falling wedge. And once we get to 94, if we hold that, then that is the recipe to get there. So there is a recipe, but we need to go step by step. We cannot be talking about 112 if we cannot even get to 87. But it's good to keep a mind map of what could bring it, because most people make the mistake of not doing such a thing and thinking, oh, there is no way we are going there, I'm just gonna sell at a loss. And this is not financial advice, but whenever I have had such an idea in the past, I tend to look at both scenarios. Okay, let's go back to realistic targets. In here we have the 85.6 immediately above the price. We saw that already in the short term. And then we have the 87. I don't know if it's my idea, but I'm starting to see the 85 heavier than the 87. End of that last week, we ended with the opposite. 85 was small and 87 was the brightest on CoinGlass. But I think since we can see in here, as the price goes up, they accumulate more these shorts. Those are probably 50x or 100x's because they are too close to the price, I think. Let's remove 100x, let's remove 50x. I think they were 25x's. The 10x are way above, the 50x is very close to the price, and 100x is too close to the price, so we are not really seeing it. I was wrong, it was 25x. This website is called Trading Different, and you can get a discount in the description if you want to get access to that as well. Let's see how is the liquidation levels of the past 30 days, and we have 82, the largest one. 78 went down on Friday, it was the highest. Now that 82 is the best candidate to go lower. If we do that, 85.8 is confirmed, is the largest one. So if you have the plan and the intention of getting out of a position on a swing trade, one great initial alternative to look at is 85.8. And not by the dollar. Please don't do that to yourself. Funding rates have been in the negative. Let's continue with the surgery. Longs are starting to pile up again. Remember that in order to continue to the upside, we need the longs to start coming back into the top end. For example, this bottom at 77 was rescued by a large number of longs coming in. The same happened with these lows at 80, where we have huge spikes of long coming to rescue the price. The ask versus bid is very flat, so there is literally no alpha in here. If we get huge numbers in blue, we are close to a bottom. If we have large numbers in the red, that is close to a top. Now liquidity is at 163, less than yesterday. We have 200, I think, and it's putting the longs at higher risk. So if you're worried about that, I think clearing that delta could take us back into 82. If you wonder, I'm gonna close my long to just re-enter there, that is risk to me at the moment of missing my long with higher targets. So I won't change anything. And now on fire charts in here, you can see that there is all these orders that are trying to contain the price, have been chasing the price since around the 5th of March. They don't let the price go anywhere. They are constantly trying to short it, but the support remains always around the same area at an average of 75, some orders up until 72.5 as well. And as I'm recording, we are seeing a little bit of a dip in here. They were shorting at around 84,500, keeping that suppressed. And we have a rug pull in here going on at the moment at 83.2. They removed that 83.2 and they remove all the support in here. So they're getting started with some price action. We have resistance at 88. Remember, I mentioned that is located at the top of the falling wedge on the daily. And below the price, we have one support at 72.5, followed by the 6666666 that now is 700. Fair value gaps, if we carry on in this direction, probably in the next couple of hours we are going to be taking the 83.4. It's just so close to the price. We have 82 and 81.6. Above the price we have 85 and 88, but after that there is a huge vacuum up until 95. And one thing I have to say, and I have said this to the downside and to the upside, this is not hopium. When there are vacuums, why did I say vacuums? I'm talking about fair value gaps. In here there were no fair value gaps, and I always say no fair value gaps, take it as there is no structure. It means that nothing stops the price and it just crosses that fast. Why does that? because it already did in the past. In here we pass very fast, so if we were able to hold above 88, there could be as well in here a fast move too, just like there was in here one. Although I have to say that this move up, thanks to Trump tweeting, has already cleared some fair value gaps in here, and that's why we don't have anything, so that area is already balanced. Alright guys, I have plenty of more alpha, but I don't want to make a video that lasts for 6 hours like an episode of Lords of the Ring, but on TA. If you want to trade Bitcoin, I'm currently using OKX and Binance. The links are in the description if you want to take advantage of these promotions. On OKX, there's a reward of 60,000 and lowering your trading fees by using links in the description. I'm currently running a trading competition on Bluffin. Bluffin is a non-KYC exchange. It's very easy to open an account, just a few clicks. You don't have to do any KYC, no VPN needed. And in this trading competition, there is just 10 days left to join with me. $5,000 is the prize pool. If you are also looking for another alternative non-KYC, there is a link as well for BitUnix in the description. This one offers bonuses no matter how small is the deposit, so probably if you want to fund your account with just a few $100s, consider maybe this one. Thanks for watching. Remember to hit the like, write down a comment down below. Let's get to 1,000 likes, and I'll see you on Monday. Bye bye.